Our next guest says a bounce could be due for those very stocks. Let's bring in Eric Jackson, EMJ Capital founder and portfolio manager. Welcome back.
Great to see you.
You think this was a significant enough event to save these stocks from these declines that we've seen? And at bare minimum, I mean, the volatility has been head spinning.
It has. These things move plus or minus 10% on a given day, whether or not Jensen's shining a spotlight on the space or not. Taking a step back, though, this is really the only corner of tech that Jensen Huang, arguably the most important CEO in the world, decided to take 2 hours out of his GTC conference this week and basically focus on, to put together a quantum day with 3 panels, including folks from AWS and Microsoft Azure talking about the future of the space. I mean, and like Kate said, basically did a mea culpa for his January comment. So the fact that, this is still a microscopic space in terms of the size of these companies and their market caps in relation to a $3 trillion company like Nvidia. But the fact that he's focused on this, he's setting up a quantum research lab in Boston. This is an important area. And when he talks about what are we going to be talking about next year at our quantum day and what evidence are we going to see and all that kind of stuff, that's very, very bullish.
I mean, I hear you when you talk about the mea culpa. The cynic in me says, come on, you're telling me the same CEO who 2 months ago said of these stocks, well, this is way off into the future. Let's not get crazy excited. I'm paraphrasing, obviously. And it caused those stocks to absolutely fall out of bed. All of a sudden now at their event talks them up. And we should view this as some significant change in the timeline of quantum computing? I mean, come on.
Well, I guess, why do it? If his goal, Scott, was to crush these guys out of existence, why do it? Why invite them up? Why have them on? When I was chatting with you after those comments in January about it, I said it was a little curious to me because as great as Nvidia is, it still comes from a classical computing framework in terms of how it's developed. GPUs are obviously the most advanced version of that classical computing framework, but quantum computing is sort of the next step. So inherently, it's a threat to Nvidia, and that's why keep your enemies closer. I think he's wanting to study the space. He's wanting to know kind of like how can we be involved in this in case there is this massive shift as sort of like a next generation step for AI and GPUs down the road. So if he was just wanting to put them out of existence, why bother to partner with them? Why bother to have?
No, I don't think he wanted to put them out of existence. I think it was a reasonably innocuous comment originally, just speaking truth. Like, okay, this is going to be amazing, but it's years off, and the stock's plummeted. And now he is out suggesting that, well, maybe it's not going to be so far in the future. I mean, you don't find anything interesting about that?
Yeah, no, I listen to his comments the way that I would listen and parse the words of a politician, and sometimes, what they're not saying is, or how they're saying it is as important, right?
Timothy Arcuri, a UBS analyst, confirmed a buy recommendation for NVIDIA stock on Friday, citing a $185 price target. Data indicates that 24 analysts have raised their profit projections, with price targets ranging from $125 to $220, which is consistent with the general consensus of analysts. The endorsement came after the Global Technology Conference, GTC, ended, when officials from the public and business sectors in a number of countries discussed the future of artificial intelligence, AI, infrastructure at NVIDIA's Sovereign AI Summit. The company's outstanding financial record, which includes a perfect Piotrowski score of 9 and sales growth of 114.2%, demonstrates its solid position. Arcuri noted that a frequently disregarded element that has the potential to greatly increase demand for AI infrastructure is sovereign AI, which refers to AI projects run by national governments. In order to reduce their dependency on a few number of significant foundation model developers, most of whom are based in the United States, many nations are investing in the creation of their own AI models and applications, as the summit made clear. Italian Colosseum and Korean Hyperclovax are two examples of such indigenous AI projects. Arcure claims that these initiatives show a global trend toward developing customized AI solutions that address the particular requirements, inclinations, and difficulties of many nations. The majority of spending is separate from the capital expenditures of significant U.S. cloud service providers, CSPs, which are frequently used to measure the demand for AI infrastructure, the analyst added, even though some AI infrastructure initiatives are in collaboration with these companies. This suggests that AI investment is more extensive than what is often covered by CSP spending. According to our query, Nvidia has a big chance since it is well positioned to meet the growing need for AI infrastructure around the world brought on by independent AI projects. The price target and maintained buy rating show faith in Nvidia's prospects for expansion in this market. Having a $284 trillion market valuation and a 39.01 PE ratio. So, what implications does this have for Nvidia stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
A week, lower about 1% today, but here to hopefully bring us some optimism on the future of NVIDIA, which also to me translates into the future of AI, frankly, is Hatem Diab, the managing director at Gerber Kawasaki. So Hatem, thank you so much for joining us today. I'm hoping that you had some positive takeaways because what was coined as, I know, the AI Super Bowl, this was not a very good Super Bowl, if that's what we're calling it. So walk us through the sort of the streets takeaways and your takeaways.
Hey, Jenny, good to be on. I beg to differ. I think if you wanted to see what the future is going to look like, there is nobody like Jensen Huang to really lay that picture out in a way that is so descriptive and so clear as to where the world is going. And frankly, when you look at the progression from generative AI, which is where we are today, to reasoning model that's are happening now, to agentic AIs and full self-driver down the road and robots, NVIDIA is really the only company out there that is building the infrastructure to run all of these things, and it's just the beginning. So I think if you're geek enough and you listen to some of the stuff and watch some of the videos they put out, you'll see where the world is going, and I think that's why you should be excited about NVIDIA going forward.
Tim, I watched it. I watched that keynote, and I liked it. I mean, Jensen had great energy. He talked about things that are coming up, as you know, and then the developments that he sees the next leg of AI growth is going to be in robotics. I wonder if, in terms of the lackluster response, is because if expectations were so high, have been so high around NVIDIA, if that's part of it, or if they're also because there wasn't nothing necessarily new, because we kind of knew about him that Vera Rubin was going to be coming. Did we need to hear about another chip, or is that not even necessary, given we still have to address the demand that's out there?
Yeah, I think you're absolutely right. I think the expectations are so high, and frankly, investors are having a hard time wrapping their heads around, what this is going to look like. We've already seen almost $300 billion in data center deployments or investments from the big tech companies, and I think people are not really understanding what that means. I think what Jensen told us in GTC is actually that pace of investment is going to accelerate to almost $1 trillion by 2028. So it's almost like investors don't believe him, or at least don't understand what that means for the bottom line for NVIDIA. And plus, I think there is a bigger macro story where people are just anxious about what the world is right now with all the slowdown fears and some of the political stuff that's going on. So it's just hard to impress in general because the market is correcting.
Yeah, I think that's a good point. Also, on the back of all the DeepSeek fallout, I think that's still a major overhang that doesn't seem like it's able to be just completely shifted because of GTC. Although historically, GTC isn't really this major catalyst that I think the street was saying it was. I mean, frankly, I thought that was a little bit mismatched. But Things also to be excited about, GM and, of course, Nvidia partnering up for more autonomous driving. But is this GM coming late to the game? Because they ditched Cruise just several months ago, now partnering with Nvidia. I mean, are they just trying to play catch up in a market that could leave them behind?
Isn't it? It's a last-ditch effort from GM for sure. I think every kind of OEM or legacy car manufacturer has to figure out how they figure out full self-driving going forward, and they all can't do it themselves because they're just not an engineering kind of DNA company. And Nvidia will be the firm that's going to provide the solutions for a lot of these OEMs. So GM is, I think, only the beginning. We know Mercedes is already working with them, but a lot of the other manufacturers will be working with Nvidia for that. Tesla obviously has their own full self-driving, and that's still kind of working itself out, but I think Nvidia will be the other player.
In other developments, after its recent occurrences, Nvidia has been the subject of multiple analyst evaluations. With a price target of $185, UBS has kept its buy rating, pointing to Nvidia's crucial market position and potential for large growth in data center revenue. Similarly, citing confidence in Nvidia's leadership and the growth of its total addressable market, Benchmark has reaffirmed its buy rating with a $190 target. Nvidia's strong product pipeline and growing client orders help Truist Securities maintain its buy rating and set a higher price target of $205. On the other hand, D.A. Davidson has adopted a more cautious stance, keeping its rating at neutral and reducing its price target to $125. Despite Nvidia's strategic focus on AI technology and the launch of the Blackwell Ultra product, this decision reveals worries about possible obstacles in the company's future performance. These latest events come after Nvidia highlighted its advances in AI and processing power during its attendance at the GPU Technology Conference. Analysts have noted that Nvidia is well positioned in the market thanks to its emphasis on AI and infrastructure, and UBS and Benchmark have expressed optimism about the company's future growth trajectory. D.A. Davidson's cautious approach, meanwhile, highlights the diversity of viewpoints on Nvidia's possible chances and difficulties. Investors will probably keep a careful eye on Nvidia's performance going forward, especially with regard to its AI projects and data center growth. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Hatem, the street is still very constructive on Nvidia, right? I look just to see, I can't find a single sell rating still, largely, essentially in the buy camp. There are some holds on it. UBS coming out today, reiterating their buy rating. They've got a $185 price target on Nvidia. One of the things that they noted that they feel like there's not enough attention paid to with regard to AI and Nvidia's positioning there is sovereign AI, meaning the AI growth story when it comes to governments and their needs, and that's an overlooked factor that could help boost demand. Hatem, do you feel like that's one of the things that was overlooked as well?
Absolutely. I think industrial AI is one, but also sovereign AI, right? Like when you look at where we are right now internationally and how all the tension that exists between Europe, and when I talk to my clients or our clients in Europe and other places, they really feel like they're left behind. They feel like they need to spend the money to really build their own AI infrastructure. And right now is really all the big tech companies. So you're going to start to see a lot of the European companies announce a lot of big AI projects. And frankly, Nvidia, again, is the only game in town when it comes to trying to build that infrastructure. And yeah, the street is not really seeing that just yet. But as we've seen some of the, for example, some of the Gulf states starting to invest a lot in these things. And I think Europe is next.
I completely agree, and I also think there's still like major opportunities here in the U.S. and some of the energy bill that's necessary to even fulfill, I think, the capabilities that some of these companies talk about in relation to AI. But Last but not least, I got to get your thoughts because you mentioned some of the turbulence regarding the overall market, which is obviously a huge factor. But as far as those critics that say valuation was just too high, it set Nvidia up for this fragility we've seen for the last several weeks. I mean, do you make the argument of, yes, that this name perhaps was a bit overvalued, or are you in the camp of hey, look at its earnings multiples, look at its growth? I mean, this name justifies that high multiple it's carried for quite some time.
Yeah, I think all of those things can be true, right? I think the valuation for NVIDIA was never super expensive, actually. But I think the valuation for the market in general, NVIDIA being 5 or 6% in the S&P, was high, which meant that when a correction happened, just everything got sold off. The reality is, when the risk-off mentality goes in, like you're going to see everything really selling off, and NVIDIA has been a victim to that. But ultimately, as you said, you should look at the PEG ratios, right? The price to earnings growth. NVIDIA is still going to grow 60, 70% going forward, for at least for the next 3 or 4 years, I think. So for that reason, I think it's definitely a buy.
Yeah, and I'm glad to hear it. We had to end this week on an optimistic note because I'm tired of all of the beaten down headlines on Nvidia, which is down on the week, but modestly lower today. And GTC still had lots, I think, to be excited about in the future. So we needed that optimism.
In an A16Z podcast yesterday, Jensen Huang, the CEO of Nvidia, talked about the importance and impact of artificial intelligence, AI. Huang underlined that AI is a tool that should be used by everyone, not just a small number of businesses. Intelligence is for everyone, Huang said, adding that everyone should develop it rather than just a select few businesses. He emphasized how crucial AI is to protecting and comprehending our own languages, cultures, and ecosystems. Referring to AI as a new layer of infrastructure, Huang further underlined that everyone must decide how this intelligence should develop. It's your responsibility to decide how you want this intelligence to evolve, he stated. Huang noted that although AI is a general-purpose technology, it has the ability to become hyper-specialized, especially in fields like disease knowledge. According to Huang, artificial intelligence will be used to refine this all-purpose technology into domain, national, industrial, corporate, and functional experts. Huang also discussed the safety of open-source technology and AI control. He argued that it is pointless to try to regulate AI since alternative forms will unavoidably appear and take precedence. AI is the most powerful factor in closing the technology divide the world has ever seen, the CEO of Nvidia underlined. He implied that AI has made technology more accessible to a wider audience by comparing the amount of people who program computers now using ChatGPT against those who use C++. The rapidly expanding French startup business Pasqal announced on Friday that it has partnered with the semiconductor giant Nvidia to provide its customers with additional tools to create quantum applications. Pasqal stated that it would integrate its cloud platform and quantum computing units with Nvidia's open-source CUDA-Q platform. According to Pasqal CEO Loic Henriette, our partnership with Nvidia will allow us to provide a highly sought-after programming model and interface for high-performance computing and the larger quantum community, ultimately accelerating the development of quantum applications. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Yeah, we have a lot going on when it comes to the options complex in general. Now, that open did actually start that process. If you're looking at the SPX options that are AM settled, also looking at some of the index options, the E-mini S&P futures, the March contract has now expired as well. Looking at some of the other futures contracts, they've also expired. So there was a little bit of a runoff there. We got a little bit close to around that 6,000 level. That was an area that may have attracted a lot of that selling pressure for now. And now we're looking for a little bit of a bounce. If you kind of look at the 1 hour chart, we are pretty much hitting the 200 period moving hour average on the 1 hour. And that's also an area of support that we recently tested right around this 5620, 5610-ish area. So you want to see some buyers that really try to step in here. But this is just we're going to see a lot of intraday volatility. We talked about that yesterday. I would expect that that's going to be the same thing here today. lack of news flow, but we do have some Fed commentary. I think Donald Trump also doubled down on the tariff conversation here, calling it a day of liberation and things of that nature. So I think the market's really kind of, once again, trying to navigate what is going to happen moving forward when it comes to policy. And then also these re-ratings to the downside when it comes to earnings for these companies. That's something that is not going to be very favorable when it comes to pricing, but it also probably will lower the bar once we get to earnings season as well. So be mindful of that. Intraday, I'm looking at 5,600 as your first area, maybe getting some buyers to kind of step in. We're 8 points away from that. Any break below that, I'm looking at 55.55, and there is flows right now at 55.20. It's the third largest contract that's being traded on the session so far. So if we do have a further breakdown, those are the two key areas to the downside here. Upside, intermediate area of resistance, 56.40, and then if we are able to try to get up 5,700 and then 57.35, 57.30, wide range. And rightfully so. There's a lot that's going on here. We've seen some intraday price movements that have been aggressive, both to the upside or downside. But we pretty much have washed away all of the Fed bump that we had. Yeah. That's not really a good sign going into the weekend here.
Okay. Kevin, the timing of all of the triple witching, I mean, obviously you get closer to the bell and a higher percentage of all those contracts are going to be closed out. But is there a possibility that could be front-loaded? Could some of this selling be just a kind of clearing of a house within portfolios or exposures or whatever before the end of the day? Like, does it push forward any of the action? Whereas usually, we're more keyed in towards the close every day. Is that the case here even more so, or does it shift?
No, I mean, throughout the day, what you're going to see is a lot of is heightened options volume just in general. So over this last week, you're going to see, and we have seen a lot of positions being rolled, both to the upside and downside when it comes to those hedges. And then today, those that do allow those positions to expire, they'll probably will be layering on new positions here throughout the day. Because if you have something that is expiring, you're also kind of losing that protection. If it's a hedge to the upside or any type of collars, you lose that protection. So you're going to see a greater amount of trading activity today. And this should be maybe the largest volume day that we actually see for the whole month. Traditionally, this is usually quarterlies are the big one here.
That's important because a lot of the days basically from mid last week when the market first started bottoming, volumes were pretty light, but then we did have a pretty good volume day that you mentioned to us before on a stronger day. So if then we have a massive volume session here, whatever direction we go, I think then that implies you'd have a little bit more importance put on that.
On the equity front, I would say so. On the options front, once again, a lot of this is going to be very mechanical, Ali. So I think you're going to have to separate those two things out. Let's say this. Once again, it's going to be a very
I see. You were talking just options volume.
I was just talking options
got
volume.
It.
Yeah.
Okay.
Yeah.
Okay.
Equity volume.
Well, you think that probably should correlate to some degree with equity volume? Maybe.
Yeah, it should. But yeah, on the options front, we will see probably heightened volume today. And then on the equity side, it may give us a sense of direction. Look, if you're kind of looking at it from a vol standpoint, though, Ali, this is usually peak vol generally over the last 15 years. Peak vol kind of is like right today, right? And then next week, generally volatility actually subsides. Now, this time can be different. It may not have to follow the trend, but that is something that we need to be aware of going into next week. And unfortunately, I mean, we're pretty much at a down week right now, just given where we are at as a price level standpoint. And usually we don't have 5 weeks to the downside. And it's not really good when we do actually have those situations here. So there's a lot that's kind of going on. But what I will say, one of the bearish things that did actually happen at the open, we brought it up yesterday. It did occur here this morning. The 20-day moving average did cross below that 200-day moving average, and that's not a good trend. We can change that trend depending on price, but if you're kind of looking at the longer time frame, that is a cross to be mindful of. Nvidia also had a death cross this morning as well, with the 50-day crossing below the 200-day. That's also not a good sign. Last time that it did that, it dropped around 25-30% to the downside here. So the technicals on the longer term time frame are kind of signaling, hey, there's probably still more downside to go here. And unfortunately, if this is our counter trend bounce that we saw, it's a very weak one. And if you're a bull, you're not really too happy as far as the price action.
Man, I'm totally
the lack of the ability. The lack of the ability for us to be able to hold prices higher.
Yeah, it's just it can't be said enough that I mean, look, we do a lot of if-then, and to me, that's pretty much what technically, the best you can do in market analysis is basically if-then, understanding if something happens, then what does it mean? That's the whole point of a correlation. If this thing does something, then I would expect the other one to do something. It's a foundation of what I think we are always trying to do here. And if this was all bulls had to offer the last week, because I've been quite optimistic, I've been finding the green shoots. They were there were breadcrumbs of hope, but that's all there's been. And we've been particular about saying that. But if that was it, then it's a bad look. If we break down to new lows, then that is a very, very listless type of market that we haven't seen in a long time. I mean, because even COVID was like just, it was panic selling and it was chaos, right? This kind of like slow drip with no buyers around, it would be something that we haven't experienced in a while.
It's a tradition. It would be a traditional bear market, right?
Which we haven't seen in a long time.
Exactly.
All we got was COVID and treasuries, but that was like bonds. That was very easy to figure out. Bonds sell off, stocks go down. So 2022 was like, even that was different. This is just like, where are the equity buyers?
Yeah, I would say if you kind of go pre-COVID, this is kind of the feeling of it. And it takes a long time for it to develop.
Well, pre-GFC, because we had no bear market from GFC to COVID. So you got to go back even further.
Yeah, that is true. What I will say, though, if you consider a bear market 20% to the downside, right, if that's your marker, then I would agree with you. But if you also kind of look at a bear market as just the ability to stall out in price, and we continue to have a slow leak to the downside, we've had a couple of since GFC, right? And that's the thing that traders need to get kind of used to, or just know COVID is an outlier, and it's not a really good market to compare any type of trading action to, because it was a synthetic slowdown just in general, is a generational move, and then the fiscal spend during that time was also something that's just completely out of the norm here. Usually these cycles, they take 6 months, 8 months for them to develop, and it takes a very long time. And you will see green shoots, and we will have green weeks during those as well. So let's not call tops, or let's not call it bottoms for right now. Let's just trade the action that we have. And right now the action says consolidation, potential breakdown even further here. Upside shot, if you wanted to take one, probably leveraging options rather than putting straight up capital to work from the portfolio to give you a shot, but also have risk management type of strategy in place.
Love that point.
If you believe that there's